Good day, everyone. My name is Norma Ickes, and I work in the Pennsylvania Department of Revenue's Bureau of Enforcement Planning, Analysis, and Discovery. I am joined today by my colleague, James Foster. For the last several years, we have been involved with Pennsylvania's marketplace initiatives and assisted many out-of-state businesses in registering for Pennsylvania sales tax. We thank you for taking the time out of your busy schedules to participate in our webinar. Our goal today is to provide out-of-state sellers with Pennsylvania customers and tax professionals information on Pennsylvania's Act 13 of 2019. Under this act, Pennsylvania expanded its definition of maintaining a place of business for sales tax purposes to include economic presence. The change affects businesses all across the country. This includes online retailers as well as out-of-state businesses that make catalog and telephone sales into Pennsylvania. Before we get into the details of Pennsylvania's law, Jim will provide some background information on the circumstances that led to the change.
Thank you, Norma. Good day, everyone. Pennsylvania, like all other states that have a sales tax, has spent the last 20 years grappling with changes in retail sales brought on by electronic commerce and the restrictions imposed on the collection of sales tax by the 1992 Supreme Court decision Quill Corporation versus North Dakota. In that decision, the court held that it was improper for a state to require an out-of-state office supply company to collect the state's sales tax from consumers and remit the tax when the company was not physically present in that state. The Supreme Court's reasoning was at least partially based on the fact that, at the time that the case was decided in 1992, there were over 6,000 separate sales and use tax jurisdictions in the United States. To impose a collection obligation on out-of-state sellers would create an undue burden that would severely restrict interstate commerce. The effect of that decision was that the states could not collect millions of dollars in sales tax on taxable items delivered to customers within their own borders. This graph from the United States Commerce Department shows the growth in e-commerce sales just over the last 3 years. From 2016 to 2018, there was a 30% increase in online consumer spending with the United States businesses. Consumers spent $517 billion online with U.S. merchants in 2018 compared to $390 billion in 2016. Elements driving this growth includes the rapid worldwide expansion of online marketplaces. Some industry estimates report Amazon accounts for 40% of U.S. online retail. The Amazon marketplace is now twice as large and growing twice as fast as Amazon's own sales. That means Amazon's platform is being used to sell more goods from third-party sellers than Amazon's own products. There are 2.5 million sellers on the marketplaces worldwide. This can be attributed in part to the existence of large marketplace facilitators. They offer order fulfillment and warehouse services combined with speedy delivery. There are now 20,000 sellers with over $1 million in sales. The ease of making sales and reaching large amounts of customers continues to increase. Walmart and others are also working to expand their own marketplaces. Other drivers of this growth include trust, visibility, and scale. The buying audience is almost limitless. Shopping is truly a 24/7 operation. Inventory and selection are not limited by shelves and square feet. While it's true that there's an art to inventory management, it is definitely now a science. Warehousing and distribution logistics have become world-class. Countless companies worldwide are in business to provide the logistics services. Key to this aspect of customer service is last-mile delivery. Last-mile delivery is defined as the movement of goods from a transportation hub to the final delivery destination. The final delivery destination is typically a personal residence. The focus of last mile logistics is to deliver items to the end user as fast as possible. And while this growth was a plus for consumers and the country's online retailers, it posed a challenge to states restrained by the Quill decision. Operating under Quill's physical presence rules, the growth in economic sales represented a measurable erosion in the sales tax base. The United States Government Accountability Office estimates that in 2017 alone, states had lost as much as $13 billion in taxes they could not collect. These are not just losses in dollars. They are losses in monies that states rely on to fund government services. Much of these losses were attributable to decreased sales and taxes collected by brick-and-mortar stores. In theory, these losses should have been recovered under each state's corresponding use tax law. Use tax laws are designed to protect the state from uncollected sales tax. Use tax is due by the consumer on taxable items purchased where no sales tax was charged by the seller, and the consumer is then to remit the tax money directly to the state. However, the use tax compliance rate is extremely low, in part because most consumers do not know about their use tax obligation. Consequently, much of the sales tax loss through online sales is never recovered. Pennsylvania attempted to address their own sales tax losses through the implementation of various programs. In 2005, it began its Voluntary Business Use Tax Program. Under this program, Pennsylvania partnered with business groups to educate business owners about use tax and then offered a penalty-free incentive to become compliant on past due use tax payments. The program was focused on business taxpayers who had no use tax reporting history. Pennsylvania collected millions of dollars of previously unreported use tax. The program still exists today, with businesses still taking advantage of the penalty-free voluntary compliance option. Additional transactional use tax programs were also incorporated that track the large purchases by both businesses and individuals of aircraft, motor vehicles, ATVs, watercraft, and items brought through customs. Also, a line to report use tax was added to the PA-40, Pennsylvania's income tax return. Now, individual consumers can voluntarily pay use tax as part of their own annual return. Collectively, all these things helped bring in what otherwise would have been unreported and unpaid use tax. While all these programs were modestly successful, Pennsylvania's tax gap continued to grow. Pennsylvania also worked directly with the retailer community to address online sales. Several years ago, the Department of Revenue met with representatives from Pennsylvania's retailing industry and several business owners to discuss the impact that online sales were having on Pennsylvania's brick-and-mortar stores. Pennsylvania retailers, like retailers in other states, were losing business to online competitors. One story shared by a tire dealer told how customers would come into a store, write down the serial number of the tires they wanted, and then went home to purchase the tires online so they didn't have to pay the tax. Brick-and-mortar stores lost sales to online retailers. Simultaneously, the Commonwealth saw that sales tax revenues were also coming in at less than projected amounts. Pennsylvania decided to address the issue and took several actions. First, the department published a remote seller bulletin to help the online retailer community have a better understanding of what activities constituted a physical presence. Following the bulletin, the Commonwealth worked with Amazon to start collecting on sales tax on their online sales delivered into Pennsylvania. From there, the department researched additional large online retailers to determine if they had Pennsylvania activity that would give them physical presence in our state. Where we found reason to believe that any of these businesses had physical presence in Pennsylvania, we reached out to those businesses to get a better understanding of their activity. If physical presence was established, the taxpayer was registered and began to collect sales tax. As a result of these efforts, many more online retailers registered for Pennsylvania sales tax. We did this over the course of several years, contacting over 2,000 online retailers. Over the course of the following years, sales tax receipts from online retailers increased, as well as the number of registrants. Yet, the tax gap remained. Here is a graphic illustration of Pennsylvania's experience with a tax gap. See how the gulf between Pennsylvania retail sales and Pennsylvania sales tax base widened between 2002 and 2012. Sales tax lagged behind retail sales due to Pennsylvania customers buying online from retailers who had no physical presence in Pennsylvania. As previously mentioned, some of this lost sales tax was recovered through the department's use tax initiatives, but we were unable to recover most of the lost revenue. Now, turn your attention to the upper right portion of the graph. Note how the gap begins to close after 2012. During this time period, the department was engaged in its online retailer outreach campaign. Discovery efforts were directed to large online retailers that we believed had a physical presence in the state but were not collecting sales tax. Many of these businesses registered as a result of these efforts. Note the very top of the graph. This is the point in time where Pennsylvania passed its own marketplace sales law. In 2017, Pennsylvania, like other states, implemented a Marketplace Sales Law, Act 43 of 2017. Under this law, marketplace facilitators and marketplace sellers that made over $10,000 in taxable sales to Pennsylvania customers were required to make an election to either collect Pennsylvania sales tax or to inform their customers about Pennsylvania use tax. We want to take a moment to define the terms marketplace facilitator and marketplace seller. A marketplace facilitator contracts with marketplace sellers to list or advertise the seller's goods and services for sale through a marketplace. The facilitator directly or indirectly collects the payment from the purchaser and transmits the payment to the marketplace seller. The marketplace seller has a contract with the marketplace facilitator in which the facilitator agrees to list or advertise the seller's goods and services, collect payment from customers, and remits the payment back to the seller. Now, back to Act 43. The first Pennsylvania election was to be made by March 1st, 2018. This law met with great success, as many more online retailers registered for their collection of sales tax, and sales tax receipts for 2018 far outstripped projections. From April 2018 to June 2019, Internet sellers affected by the law remitted $227 million in previously unremitted sales tax. This is a new stream of revenue for the Commonwealth, decreasing potential uncollected use tax dollar for dollar, and contributes strongly toward current overall revenue collections. Implementation of the law enabled Pennsylvania to make substantial progress in closing the tax gap. Norma will now tell us about the Wayfair decision.
On June 21, 2018, the Supreme Court of the United States handed down a decision in South Dakota v. Wayfair, Inc. that changed the sales tax landscape across the country. The case was brought by South Dakota. That state had passed a law in 2016 that required out-of-state sellers with no physical presence in the state to charge, collect, and remit the state's sales tax if the out-of-state seller had an annual South Dakota sales of $100,000 or more than 200 different sales transactions shipped to South Dakota. Several large online retailers refused to comply with the law, claiming it was unconstitutional based on the earlier 1992 Quill decision. In ruling on South Dakota's law, the Supreme Court overturned the Quill decision. In overturning Quill, the court stated that modern commerce does not align itself with the ruling's physical presence criteria. The court also wrote that, quote, "The Internet's prevalence and power have changed the dynamics of the national economy." In addition, the court approved of several positive features in South Dakota's law. First, South Dakota affords small merchants a reasonable degree of protection because the law only applies to sellers with over $100,000 in sales or 200 separate transactions with customers in that state on an annual basis. The court referred to this as a safe harbor. Second, the South Dakota's law ensures that no obligation to remit the sales tax may be applied retroactively. The court also made favorable mention of South Dakota's membership in the Streamlined Sales and Use Tax Agreement. The agreement is the product of the Streamlined Sales Tax Governing Board, which was created after the 1992 Quill decision. The goal of this organization was to find solutions that would make the state sales tax systems less complex. Some of you listening are likely doing business or have clients who are selling online to customers in one of the 24 states that are part of the agreement, and you know all about it. For those of you who are not familiar with the Streamlined Sales and Use Tax Agreement, here is a simple overview. Member states of the Streamlined Sales and Use Tax Agreement agree to adopt specific simplification measures into their own sales tax administration requirements. These include a single state-level tax administration, uniform definitions of products and services, simplified tax rate structures, access to sales tax administration software paid for by the state. This is accomplished by board-approved certified service providers known as CSPs. Sellers are not held liable for reliance on CSP software solution determinations. There are 23 member states and 1 associate member state that have adopted the agreement and its simplification measures. The court indicated that all of these characteristics taken together prevented discrimination against businesses whose virtual presence in a state was limited. In keeping with the 2018 Wayfair decision, the Pennsylvania State Legislature expanded its definition of maintaining a place of business for sales tax purposes by passing Act 13 of 2019. Under the Act, the definition now includes economic presence. This is how Pennsylvania's law works. Any business that has gross annual sales of at least $100,000 to Pennsylvania customers has economic presence in our state. That means effective July 1st, 2019, all marketplace facilitators and online sellers who maintain a place of business by having economic presence must now register, collect, and remit Pennsylvania sales tax. The law also impacts out-of-state businesses with mail order catalog and telephone sales into Pennsylvania. Unlike many of the other states who have adopted economic presence rules, Pennsylvania does not have a transaction threshold. Again, our only threshold is the annual Pennsylvania gross sales of $100,000. It is also important to note that Pennsylvania's law is prospective only. There is no look-back period. We will now discuss how to calculate gross sales. First, in calculating gross sales include taxable and non-taxable sales made on all channels. For instance, a marketplace facilitator should count their direct sales and sales made by marketplace sellers on the facilitator's platform. The sales threshold of $100,000 will be measured by calendar year. After the first year, collection will begin in the second quarter to allow taxpayers adequate time to compile their calendar year sales. For example, The current collection period is July 1st, 2019 through March 31st, 2020. Gross sales for calendar year 2018 are used to determine economic presence for the current period. The next collection period will be April 1st, 2020 through March 31st, 2021. Gross sales from calendar year 2019 sales will be used to determine economic presence. Subsequent years will follow the same pattern. While not a member state of the Streamlined Sales and Use Tax Agreement, Pennsylvania has contracted with certified service providers, referred to as CSPs, approved by that organization to assist businesses now required to collect Pennsylvania sales tax. A CSP is an agent certified under the Streamlined Sales and Use Tax Agreement to perform all the seller's sales tax functions. A CSP is designed to allow businesses to outsource its sales tax administration responsibilities. The available services of a CSP makes Pennsylvania sales tax compliance easier for businesses and individuals. Pennsylvania is subsidizing the services of several CSPs so that the service can be provided to businesses for free or at a minimal cost. Any business that does not have physical presence in Pennsylvania may now use the services of a CSP to fulfill their sales tax administration responsibilities. Use of a CSP will make registration easier since the CSP fulfills this task. CSPs also take care of filing returns and forwarding sales tax collections to the Department of Revenue. As part of their service, CSPs will provide computer software to help their clients determine product taxability. In general, the department will review the work of the CSP for compliance. As long as the seller properly relies upon the CSP's solution and the CSP timely implements any identified changes associated with product taxability, there will be no resulting liability for the seller. CSPs will file a composite return and payment with Pennsylvania every month. This filing method used by CSPs is similar to how marketplace facilitators report for all sellers using their platform to make taxable sales. Each CSP will upload to the Pennsylvania Department of Revenue a file showing filing detail by seller with dollar amounts included in the composite each month for analysis and tracking. The combined return benefits the sellers by allowing them to avoid the sales tax registration process and account maintenance. Sellers are also not held responsible for any errors made by the CSPs in sales tax administration. In summary, a CSP provides the following. The CSP takes care of most of the sales tax administration for their clients. CSPs help sellers determine which of their products are subject to sales tax. Sellers using a CSP are not required to obtain a sales tax license or to file returns. The CSP's clients have certain responsibilities. The clients must provide detailed information on their products to ensure accurate determination of Pennsylvania sales tax. For instance, if a company sells clothing and accessories, it must identify individual products within that category. If a business sells gloves, then it needs to describe the individual types of gloves. This is because some gloves are taxable and some gloves are not. Gloves for everyday wear are not taxable. However, gloves used for athletics, such as gloves for baseball, golf, racquetball, and so forth, are taxable. This detailed information will help CSPs accurately determine taxability. Clients must also provide an annual attestation that they have no physical presence in Pennsylvania. Again, This is because online retailers with a physical presence in Pennsylvania are not eligible to use a CSP. The attestation form is a revenue form provided to the client by the CSP. Here is the list of certified service providers that Pennsylvania has contracted with. These CSPs are approved by the Streamlined Sales Tax Governing Board and have all the sales tax administrative capabilities and expertise to manage compliance with Pennsylvania sales tax regulations. Businesses who choose to use a CSP should contact any of these listed companies. The web addresses are provided for your convenience. The information is also included on the department's website. There are certain circumstances that make a business ineligible to contract with a CSP. The first circumstance we will address is a business with a physical presence in Pennsylvania. These businesses should already be registered for sales tax and filing directly with the state. A business is considered to have physical presence in Pennsylvania when it has retail store, warehouse, inventory, or the regular presence of traveling salespeople or representatives. There are other related activities that can give out-of-state online retailers a physical presence in Pennsylvania. Let's look at 7 of these. The first one is inventory storage at locations within Pennsylvania. With the growth of large internet retail companies, many retailers are using those websites to sell their product, and may also store their products in warehouses in states, including Pennsylvania, throughout the country to facilitate more rapid delivery to the customer. Out-of-state businesses should be aware that any property located within the Commonwealth will create a physical presence for the company that owns it. The next situation we will cover is out-of-state businesses having a contractual relationship with a business or individual physically located in Pennsylvania. The Pennsylvania Businesses or Individuals website has a link that encourages purchasers to place orders with the online sellers. The in-state business or individual then receives consideration for the contractual relationship with the online seller. Many online retailers have affiliate programs where they contract with Pennsylvania individuals to market or sell their product, and the Pennsylvania business or individual receives a consideration for directing customers to the online retailer's website. For instance, one company had what was termed representatives in Pennsylvania who would distribute discount cards with the online retailer's website that included a code for the representative. When purchases were made on the website using the code, the representative would accumulate points, which were then exchanged for cash or merchandise from the online retailer. Another company would contract with Pennsylvania residents to place a link on the online retailer's website on their webpage. When customers used the link to make purchases, the Pennsylvania residents would receive commission checks. Each one of these activities gave those companies a physical presence in Pennsylvania, and they were required to collect Pennsylvania sales tax. Using anyone to provide repair, delivery, or other services in our state constitutes maintaining a place of business in Pennsylvania. Some companies we reviewed sold large items, such as furniture or mattresses. When the delivery affiliates provided additional services, other than simply dropping off the purchase at the customer's Pennsylvania location, this created a physical presence. White glove delivery services is an example of these additional activities. With white glove delivery service, the product is brought into the customer's home and then placed according to the customer's instructions. Any affiliates, including corporate affiliates, who provide a service in Pennsylvania, including but not limited to storage, delivery, marketing, or soliciting sales, which benefit or support the remote seller's business activity, would create a physical presence. For example, Amazon runs a website that sells products. but those products are stored in warehouses of affiliated entities within the Commonwealth. Because these affiliated entities are providing a service in Pennsylvania, the storage of property that benefits the online seller's business meets the definition of maintaining a place of business in the Commonwealth. An online retailer is also considered to be maintaining a place of business in Pennsylvania when its employees regularly travel to Pennsylvania for any purpose related to the online retailer's business activities. One online retailer that was reviewed by the department routinely held college fairs at Pennsylvania colleges and universities to promote and demonstrate their product to Pennsylvania customers. Company employees came into the state to market their product and to solicit sales from Pennsylvania residents. This activity was sufficient to be considered maintaining a place of business in the Commonwealth. The next situation that we will talk about is an online seller who accepts orders that are shipped to Pennsylvania customers from a Pennsylvania facility operated by an affiliate, agent, or independent contractor. This online seller has physical presence. Again, inventory or product located in Pennsylvania constitutes physical presence in the state. The last scenario we will cover is what is referred to as click-through technology. This is when an online retailer solicits orders from Pennsylvania customers through a website of a Pennsylvania business or individual with a link back to the retailer. For instance, a restaurant located in Pennsylvania had a link on its website that allowed consumers to order outdoor cooking equipment from an out-of-state business. The out-of-state business was considered to have a physical presence in Pennsylvania. The last reason for ineligibility is non-compliance. When a CSP finds that a client is not in compliance, they are dropped as a client by the CSP. An example of this is when a CSP does not timely receive sales tax money collected by the client. The online retailer is considered delinquent on his sales tax payment. The CSP notifies the department. In order to continue to conduct business in Pennsylvania, the online retailer is then required to register directly with the department. The department will use its enforcement tools to ensure compliance. And now Jim will talk about taxpayers who choose not to use a CSP.
The use of a CSP is not required. It remains a business decision for online retailers selling into Pennsylvania. If an online retailer wants to file sales tax returns directly with Pennsylvania, then they must do the following. Obtain a Pennsylvania sales tax license. The license is obtained online by completing the PA 100 Enterprise Registration Form. The online retailer must charge, collect, and remit Pennsylvania sales tax and timely file sales tax returns. This must also be done online. Note that the taxpayers who elect to file directly will initially be registered as quarterly filers. Their first quarterly return was due by October 21st, 2019, covering the period July through September. The next quarterly return is due by January 21st, 2020. Registration and filing are both done using the department's website at www.revenue.pa.gov. Taxpayers register for a sales tax license and also do their filing and remitting through the department's e-Services Center. The center is accessed from our website by clicking the Electronic Tax Information and Data Exchange System, ETIDES, icon circled here. Note the first link in the upper right-hand corner. This link is for the PA 100 online registration form and is used to apply for a sales tax license. The next reference link accesses the department's ETIDES system and is used to file returns and remit payments. Online retailers filing directly with the department are also required to accurately determine the taxability of the items they sell. The department provides specific information, resources to assist businesses in making taxability determinations. The first information resource is the Rev 717 Retailer's Information Booklet. The booklet is published on the department's website as a searchable PDF document. It is organized by product category. Examples are given in each category of taxable and non-taxable items. For instance, earlier, when we talked about determining taxability, we referenced the category of clothing and accessories, specifically gloves. This slide shows page 14 of the booklet, which covers some of those items. Note that the individual items listed on this page are marked as taxable T and non-taxable NT. Another information resource is the department's online Customer Service Center. The Online Customer Service Center is a collection of thousands of questions previously submitted to and answered by the department. The Customer Service Center is accessed from our website using the highlighted link. The link will take you directly to the center where you can choose to do a general search on the entire database. As an alternative, you may use the Find Answers tab to narrow your search by category. If you do not find the information you're asking for, you may use the Submit a Question option. This option allows you to ask your own question. The department will respond within 72 hours. You may also choose to contact our Customer Experience Center at 717-787-1064. Department representatives are available to answer your questions. The CEC telephone lines are open from 8 a.m. to 5 p.m. Eastern Standard Time. These are the resources available to help you get answers to sales tax questions. Now, Norma will summarize this for us.
In summary, Pennsylvania's law requires out-of-state businesses with at least annual Pennsylvania gross sales of $100,000 to collect and remit Pennsylvania's 6% sales tax. This is referred to as economic presence. No physical presence is required. The law is applied prospectively. There is no look-back period. To assist in compliance with Pennsylvania's sales tax law, Pennsylvania has procured and contracted the services of 4 certified service providers approved by the Streamlined Sales Tax Governing Board to assist in sales tax administration. Businesses are not held liable for reliance on CSP solutions. For out-of-state businesses who choose not to use a CSP and to file directly with the state, Pennsylvania provides easily accessible information resources to assist in determining which goods and services are subject to Pennsylvania sales tax, and an electronic services center for electronic filing of returns and remittances. Pennsylvania's implementation lines up favorably with the attributes of South Dakota's law the United States Supreme Court found favorable in the 2018 Wayfair decision. Pennsylvania creates a safe harbor with its $100,000 threshold. As we previously stated, there is no transaction threshold. The law became effective July 1st, 2019, and there is no look-back period. And with the contracting of certified service providers, administrative and compliance costs are reduced. It should be noted that Pennsylvania has a central collection point for sales tax. Pennsylvania is one of the few states with a single statewide sales tax. While it does have local taxes in the city of Philadelphia and Allegheny County, only businesses with a physical presence in those locations have to collect the local tax. Therefore, if your business has only economic presence in Pennsylvania, The sales tax rate is a flat 6%. And one last point we want to discuss. Act 43 of 2017 has been suspended. If you were impacted by this act, you no longer have an election to collect sales tax or to comply with the use tax notice and reporting requirements. You must collect Pennsylvania sales tax if you have economic presence and you make taxable sales. Out-of-state businesses with no economic presence or physical presence have no sales tax obligations with the state, including notice and reporting requirements. With the overturning of the Quill case, the nationwide sales tax landscape has changed. Most sales tax states have adopted economic presence laws. However, even with this change, compliance efforts in this area must continue. Even with the court's Wayfair decision, some estimates place the remaining uncollectible sales tax at $3.8 billion. Pennsylvania's portion of this is $245 million. Driving this number is companies with less than $1 million in total U.S. sales, sales activity outside of any marketplace, and sales made in states that are not part of the streamlined sales and use tax agreement. Now, Jim and I will review some frequently asked questions. Jim, you take the first one.
Answers to frequently asked questions is the concluding segment of our presentation. Economic presence and the rules and requirements that go along with it are new to everyone. We welcome your businesses to our state. Our goal at the Pennsylvania Department of Revenue is to make it simple and easy for you to comply. Our first question is this. If a business makes all non-taxable sales to Pennsylvania customers, such as clothing for everyday wear, must they still register for sales tax if their annual sales equal or exceeds $100,000? The answer is no. Sales tax registration is not required if a business sells only non-taxable items. Keep in mind, change is often a part of a successful business. When you add products to your inventory, always check about their taxability.
If a company elects not to use a CSP and files directly with Pennsylvania, must the company also collect Pennsylvania's local sales tax? No. Pennsylvania's local sales tax is based on where the sale is made. Therefore, businesses with economic presence only would have no requirement to collect the local sales tax. Our sales tax rate is a flat 6%. Charge and collect 6% sales tax on your taxable sales to your Pennsylvania customers. It is that simple for you. The local sales tax is collected by businesses who make sales from physical locations in the city of Philadelphia or Allegheny County.
Do businesses with only economic presence have Pennsylvania use tax obligation on their purchases? No. Pennsylvania use tax is due on items consumed in Pennsylvania. Businesses with no physical presence in Pennsylvania would not have this obligation. If your Pennsylvania presence is only economic presence, then use tax is not one of your obligations.
Question. My business was subject to Pennsylvania's marketplace sales tax law through June 30th, 2019, and elected to comply with use tax notice and reporting requirements. Must I still provide year-end use tax reports for the first half of 2019 to our customers and to Pennsylvania in January 2020? And the answer is no. Pennsylvania has suspended the Marketplace Sales Law, Act 43 of 2017. As stated in the answer, the act has been suspended. Those year-end use tax reports are no longer due.
Question. I am an online retailer located in another country with Pennsylvania customers. Does this law apply to my business? And the answer is yes. if your annual gross Pennsylvania sales are at least $100,000. It is not where your business is located that determines economic presence. It's your total sales to Pennsylvania customers.
Are online retailers who were not collecting and remitting Pennsylvania sales tax prior to Act 13 of 2019 liable for sales tax on sales made to Pennsylvania customers before July 1, 2019? No. Pennsylvania's law is prospective only. The key point here is your business and its tax obligations begins with us on July 1, 2019.
Question: can a buyer making an online purchase of taxable items claim a sales tax exemption on the purchase? The answer is yes. Buyers may claim a sales tax exemption on the online purchase of taxable items. The buyer must provide to the seller a properly completed exemption certificate in order to claim the exemption. Information about exemptions and the exemption certificate are available on our website. Pennsylvania sales tax rules provide for a series of exemptions when purchasing taxable items. Information on sales tax exemptions and instructions are available on the back of the exemption certificate. If a seller is using a CSP, the seller will work with the CSP to make sure exemption claims are properly documented.
How are online retailers that are already registered to collect and remit Pennsylvania sales tax affected by Pennsylvania's new law? Online retailers that are currently collecting and remitting Pennsylvania sales tax should continue to do so. Businesses who now have only economic presence in Pennsylvania have the option to outsource their sales tax administration to CSPs. It will be a business decision for you. You can continue as you have done, or you can contract with a CSP to administer your sales tax needs.
Question: what if a seller is above the threshold today, but then sales drop below the required levels? The answer is, in Pennsylvania, the state recommends online retailers continue to collect and remit sales tax despite falling below the thresholds. Even if your Pennsylvania gross sales falls below $100,000, we suggest you continue to collect Pennsylvania sales tax. A drop in sales can be followed by an upturn. It should be easier for you to keep on collecting rather than going back and forth with registration.
And now our last frequently asked question. Are Pennsylvania corporate net income tax rules impacted by economic presence? Yes, they are. Corporations with annual Pennsylvania sales of at least $500,000 from certain types of income must file corporate net income tax returns for tax periods beginning January 1st, 2020. More details are available in our Corporate Tax Bulletin 2019-04. The bulletin can be found on our website. Today we are focused on sales tax, but we want to alert our listeners to recent corporate tax developments in this area. Most of the material covered in today's presentation is also available for review on our department's website under these featured resources. This concludes our presentation. We are pleased you have joined us today. Our goal today was to provide out-of-state sellers with Pennsylvania customers and tax professionals information on Pennsylvania's Act 13 of 2019. Now you know about the expanded definition of maintaining a place of business in Pennsylvania for sales tax purposes to include economic presence.
And again, we say to you and your businesses, welcome to Pennsylvania.